It's our pleasure to bring in David Darst, Chief Investment Officer of Americana Partners. And you may remember him as the head of Morgan Stanley Wealth Management for, what, 2 decades or so?
Yes.
Folks want to know what's happening to their money now. They're getting nervous. They're looking at their 401ks. They're looking at their IRAs and saying, oh, no. What do you tell them?
Well, a couple of things. One, I think this chaos that's going on, this turbulence, this volatility is intentional. I do believe that the administration wants to stir things up, Muhammad Ali style. He lived from 1942 to 2016. He lived for 74 years, and his motto was float like a butterfly, sting like a bee. And that's what I think is going on right now, because they want, Nicole, to be riding an upwave leading into the November 3rd, 2026 midterm elections. They don't want to be dealing with the chaos then. They want to clean house. You're going to redo your kitchen on the North Fork of Long Island. You rip it out first. You don't have people over.
Right.
You don't have people over. So the 5 building blocks. Number 1 is the economy. It's doing okay. The jobs are all right. It's doing okay. Number 2 is inflation. Seems like it's coming down. The numbers, the latest one was 2.6%, you said here on the show, versus 2.9% for the personal consumption expenditures. Number 3 is the Fed and interest rate cuts. We at Americana Partners were thinking about 1 to 2. Now we think maybe 2 to 3. We might have 2 to 3 since inflation is, it's coming down, but it's a little sticky, okay? Number 4 is the artificial intelligence enthusiasm, and it was bordering on mania. I was this DeepSeek development, and then Alibaba, which has now got another cheap version of this, Capital Light. They're doing it not with chips, they're doing it with tweaks of software, and that's very, very important in terms of the cost structure. So that one's reduced, and that's why I'm coming in here with the names I'm coming with today. They're not tech. They're not tech right now. That's kind of been put on the side. The 5th one is tax cuts and reorganization of government and business-friendly policies, and that one I think is coming. But first, we got to rip out the kitchen. That's what's going on right now, Nicole.
So these are a lot of things to focus on, and it's one by one. You stayed away from tech. It did sound like you think they're laying the groundwork for better times ahead. So when you see the S&P at close to 5,700 today versus 6,000, and there were folks who were coming on and saying 6,500 or 7,000. Do we get to the 6,500 and 7,000?
I love that.
Is that 12 months, 18 months? I mean, when do we get to some new highs?
Well, I think you could easily see that if you get the tax package passed. That would be one of the catalysts. I think this whole thing with Europe spending more on its own defense is a big positive. The tariffs. It's interesting. We learned in college in economics that tariffs cause the currency to go up. Our currency's gone down because the German bond market yields have risen so dramatically that they pulled up other yields, okay, and caused the currency to go up. So it's not the dollar going up, it's the euro going up, which is putting pressure on the dollar. That's what's happened. Look, President Trump.
You feel like positive, right?
Yes, very positive. President Trump and Scott Bessent want 3 things. They want 3 things lower. Number 1, oil. Number 2, the dollar. And number 3, interest rates. And Nicole, all 3 of them are lower. They're laying the groundwork. They're laying the groundwork for a nice move upward. So this is a time to start nibbling. This is time to start putting money to work. It's the damage. A lot of the damage has been done. 5,700 you just mentioned. That's where it was on the day of the election. 5,700. It's back to the election.
Yeah, look, today, I mean, we got pretty close there. I mean, I don't know what the low was, but I know I looked up at one point it was 57 to 15 or so. That being said, here you have some names that you've picked, and you stayed away from tech in the picks that you have today. You have Barrick Gold, Estee Lauder, and AbbVie. Very interesting groups here. Tell me maybe a sentence about each one. I mean, we'll kick it off with Barrick Gold.
Barrick Gold has, they produce 4 million ounces of gold per year. They have a 77 million ounces of reserves, provable and probable reserves. They yield 2.3%. It's a way to have exposure to gold. Stock's up 17, 18% this year. Okay, have exposure to gold. They have, I don't know, 6-7 billion in debt and 27 billion, Nicole, in shareholders' equity. It's a very strong balance sheet. They bought Homestake. They bought Randgold. That's where they got their current chairman, Mark Bristow, 66 years of age, PhD, South African, and he knows this. I have to believe that they are a Rupert Murdoch of the gold industry. They're adding more and more companies. Now, the largest single gold mining operation in the whole world is owned by them, and it's in Nevada. It's not in a country that's got subject to a lot of, they do have Papua New Guinea. They do have Mali. They do have Dominican Republic. They've got a big gold operation in Dominican Republic. So, but they have the biggest gold mine operation in the whole world in Nevada, which is stable.
You made me feel good when you said that they actually have the ounces in reserve, millions of ounces in reserve, because the conversation I've been having with folks is that countries have been buying gold, and that while gold goes up on paper, it takes them 4 to 6 weeks to get the bars of gold, and it made people sort of wary about whether or not they should invest in gold anymore.
Wary is the word.
And we started to hear people talking more about Bitcoin and such. You know, is it buy gold? Buy gold? It's there?
I think it's a way for people to get into gold who've not owned gold before, is own it this way. They're all-in cost. Right now, gold is selling for close to $2,900. Their all-in cost is about $1,500 per ounce. So every ounce they sell, they make $1,400 on, Nicole.
All right. So we'll leave it there. And by the way, UBS upgrades Barrick Gold to a buy from a neutral rating, has a $22 target this week, and so it's at 18 and change. So they also see some upside.
Right now,
there.
17 analysts buy, 4 hold. That's where it is on Barrick.
There you have it. Okay, good. And 1 year up 20, just year to date up 21%. Okay, let's move on to Estee Lauder. Totally different category. Why is Estee Lauder?
They make Botox. 11% of their, and people want to look better all over the world. We'll come to that on Estee Lauder later about wanting to look better. But they make Botox. 11%. They are losing revenues from Humira, which is the largest selling drug of all time. You've said it here on the show. $21 billion a year they were putting. Now it's down to about $11 billion a year. But they've got 2 new ones coming in. They've got Rinvox and they've got Skyrizi, and they expect $37 billion in revenues 2027. 2 more years, $37 billion. The total revenues of AbbVie is about $58 billion. So you can.
Wait, Estee Lauder, or AbbVie? Which one are you?
AbbVie.
Okay, so you're on.
Did
AbbVie,
I say Estee Lauder? I hope not.
Oh, you're saving that for last. Yeah, go ahead.
But AbbVie has a 3.2% yield. They pay out about 61% of their earnings every year, so the dividend is very well covered. This is a drug pipeline refill story. The reason the stock is where it is right now, 150 to 210. It's at the top end of its range.
Right, it's 214.
Yeah. So the reason it's there is Humira. Everybody's worried because there's 10 copies of Humira out there
and
now,
this
Nicole.
Could go to where? Because it just hit a high of 215 recently. Where can it's at 214 today?
You can get 250 out of this stock easily, and a 3.2% yield, Nicole. 3.2% yield.
Bonus.
While you wait. Exactly.
All right. And Estee Lauder, which is sitting at $73, has not had a good 1 year.
It's down.
And has not had a good year to date. 1 year down 50%. Year to date down 2%. And David Darst says buy. Why?
You know what? It is a play on a couple of things. Number one, aging populations. Don't forget, 51% of their revenues is skin products. Okay, 28% is makeup, 14% is hair, and 5% is fragrance, okay? 71% of their business is overseas, okay? They've just put in a new chairman, new CEO. His name is Stéphane de la Faverie. He's been there a long time. He knows the business. This is a China recovery story. China, if they're stimulating again, this is a China-Asia emerging markets recovery, because you got the young people, they want to look nice. You got the older people who want to revisit their looks,
so it's a real dog right now.
It's a dog. It's down 50%.
It can go to.
It's down 50%.
And it can go.
You could easily have. It's now 70. You could easily get 100 out of that. That's another $30.
We'll take it.
So,
David Darst, thank you.
Nicole, thank you.
It's always a pleasure to have you on. David Darst, Chief Investment Officer of Americana Partners.
Thank you.
Thank you, David.